Yes, Mr. Rahul, absolutely. And a very, very happy new year to all of you. This is the first session of the 2019 new year, and we are on the 3rd of January today at around 1:45, and we are going to do some live market analysis. Yes, and I really, really, from the bottom of my heart, wish you all the best with your dreams and aspirations, and God bless you with the best of market experience. And definitely, there is a lot of clarity which is awaiting you on the other side of this webinar as we go forward. And in case you want to ask me any questions regarding concepts or stocks in particular, we can take that up too. Today and yesterday, okay, today and yesterday we've got to see a different kind of transition, and which I like very much because it's the transitions where the real money is made. Now, today's session is going to be about two to three things. Okay, one is going to be the live markets and the stocks which are on radar and the Nifty and Bank Nifty analysis. The second is going to be a small discussion on Bollinger Bands, and the third is going to be a clarity about trading psychology. Okay, so today let's begin with our live session. Once again, welcome and thank you for taking out your time. Right. So today and yesterday, so what I did today for today's sessions, I did not put any lines on the chart. I removed all the lines, all the trend lines, all the indicators, and just came up with the naked chart and show you how these things are put across with each other in such a clarity that one can clearly understand what is going in the markets. Now, let's take up for starters, let's take up one thing which we had spoken in the last few webinars is that on this area, we can see a lot of interaction between buyers and sellers. So let's take up this area. A lot of interaction between buyers and sellers. And I told you that these points, when there's a lot of past interaction between buyers and sellers, there's a fight of buyers and sellers, one should definitely keep these areas in mind and let the market show what it is doing once it's come here. So if we see in the last few days, we have seen that the market has wildly gone up and down in December, and every time it has gone down up, it's come back, gone down, it's come back up. Now the beauty over here is that if we understand the nature of volatility, we have to understand that the market will always be in a mean reversion mode, right? The volatility will always be in a mean reversion mode. It will never be such that the market is going to only go one direction. It will have its consolidations. It will have its phases of alignment with the larger time frame. It will have its phases of resting. Okay. So when we end up seeing moves which are something like this, that the market every time it is coming down, it's wildly going up and going back up. There is something which I call the lack of structure, right? Now, what do I mean by lack of structure? I simply mean by lack of structure is that if you notice from the bottom, there is no basing. This is just one-sided moves. There are probably no basings at all, right? So when there is no basing, they are not showing us a lot of reliable strength. That means that to gain that reliable strength, what is happening is that the market needs to catch up with something we call time correction. So whenever the market has caught up with time correction and given some more time on the charts on a certain zone or level, or given enough number of corrections to digest the gains, then the trend has remained healthy. But overall, if the trend is having more moves which are just one-sided, this is not a sign of a healthy trend. This may be a sign of a temporary strength, but it is not a sign of a healthy trend. So in the last particularly 2 days, which have been very interesting, and I had not been having some live sessions because I was a little busy with certain things and I was, partying, going out for the new year, etc. Had a great time. And then in the last two sessions, I really saw the market was doing something which was very interesting. So this day, one day back, okay, we saw that the price has come around these interaction areas and has come up very, very swiftly. Again, I noticed that this move has no basing. Now, of course, this is not something which uh, is very difficult to understand. These are the nitty-gritties which are taught in my full session, which is a 15 session course in the first class itself, right? So these are not some things which are very, very difficult. Okay. But just to get you into the clarity, is that whenever the market you see, whenever the market you see is showing us obnoxious volatility, or obnoxious one-sided movement in one direction, there is a high likeliness that that will not sustain. Now, if in a larger time frame it is coming up from a very, so this is the larger time frame, which is the daily chart. If it is coming up from a very good breakout structure, there's a different thing. Now, this structure is something which is showing us that there is a major fall which has happened, right? So there has got to be some other catch to it before it can really go high. Now, the point is that when people generally come to the market and with half knowledge or with less knowledge or no knowledge, the problem is that they end up getting caught by the emotions of the market, right? Now, ending up getting caught by the emotions of the market is the biggest trap for a trader. Please understand this thing very, very clearly. You have to only focus on your setup, and if your setups are ready on the chart, only then you take the trade. A lot of people come asking, they ask me, sir, इंट्रा डे हमको ट्रेड करना है तो मैं डेली का कितना कमा सकता हूँ? How many of you have this question in your mind कि सर आपका कोर्स मैं करना चाहता हूँ लेकिन डेली का कितना कमा सकता हूँ मैं इंट्राडे करके? How many of you have this question in your mind? One person has this question. Two people, three, five people have this question. Okay. Now let me tell you one thing. Okay. The markets move perpetually. The markets move perpetually, right? So when the markets are moving perpetually, that means for day and night is for you and me. There is, morning and evening and market closing and opening for you and me. But for the market is a perpetual forever movement. And in this perpetual movement, in the different time frames, the market will be giving streams of moves, which will be streams of opportunity. Okay. And there will be these gap ups and gap downs also, which one can take as opportunity, or opportunity of not just trading positionally, but also just an opportunity to read the market from that perspective. So let's discuss what happened yesterday, right? So yesterday, after that swift movement, we saw that the market has gapped down actually. I'm opening the 15-minute chart for clarity's sake, and I'm for the time being removing these lines so that we can study the chart very well. Then we'll come back to Bollinger, right? So we saw a gap yesterday. Now I have told again and again to my students who have already done the full course, right, that when we study gaps, we understand how we can benefit from gaps in not just manners of positional trading, but intraday trading. So the market gap down, and obviously the close of the gap, the last candle, okay, is over here, and where this is where the gap down has happened in the opening, right? So there is this gap area which you can say is starting from over here and coming till here, the close of the previous day and the opening of the next day. This gap area after a gap down often acts as a resistance zone. Often acts as a resistance zone. Now, one more reason why should it act as a resistance zone? Because you see the areas from which it has fallen is a past significant resistance area also. So if I just match up these puzzle points and get across over here, I see that after a gap down, now once the market has gone one-sided up, you just don't expect it to just go one-sided down, except for the most topping moves. So there's this pullbacks, right? This pullback, and there was a crucial fall over here. Now this was present in Nifty as well as in Bank Nifty. I traded the Bank Nifty after this pullback. When this fall started, I traded the Bank Nifty with puts on the weekly option. It did make me a magnanimous amount of money only in a few minutes, and then after that I let the trend follow with half my position. And in case of Nifty also, it has given a very good move. Anybody trading would really benefit from it, right? Now the previous day's action is now considered to be important. Why? Because it's fresh in the minds of people, and participants of the market are people like you and me and a lot of other people who are professionals or retail traders or are institutes, right? So the previous day's action is quite significant to take notice of. And I'll come back to how this is happening. Now you see over here, when the price has come towards the previous day's low, there's a little bit of fight between buyers and sellers happening. Now, as I told you in the previous live session, which those who are not seen can go and check on YouTube, I have seen this, that we need to see if there's a support coming up, then it is not a support until the price takes a support over here. And is the price taking a support over here? No. In fact, it is breaching it, and there's a lot of power in this movement, which we can see a well-structured movement with a pullback, a consolidation. That means there is a lot of fireworks which is left, and the price just come here, rests a little bit, and then goes further down. Okay, now I told you that the potential support area is there, and even though we did not see price taking support, we saw the price resting here a little bit. Now how I have marked these areas, okay, till morning, and I can show you with the timing that I have taken a trade today by going short around these areas, actually at the fall of these areas. So let me just bring the line over here first. So let's make a line over here. Okay. So now these potential support zones are now potential resistance zone. And when the market is coming over here, like yesterday in the last hour, we saw some sort of a pullback, did not work out. Pullback did not work out. So again, when the market is going down over here, there are shorting opportunities with a pattern, with the move which is happening immediately, and with a very strong trend. So I took another short position over here. Now, one of my short positions which made me money on yesterday's move was over here. Okay, and then a little bit more considering the trend which I followed with some of my position. And there was another short position which I took over here, which again I followed the trend with significantly. And this is how you have to take a downtrend, because the patterns can be coming up very clearly. You never know how they will come up. The market is moving with the volatility, so you need to give the market some space to move. But when the time for action comes, only then you act. The problem is that most people have been psychologically wired to think in terms of bargains. कि किसी चीज की दाम नीचे गिरता है तो the price should there should be more demand for it. Okay, you're psychologically wired because in the normal social structure we are born in, if something falls, the demand for it increases. But in markets, when the prices fall, the demand for it decreases. When prices rise in markets, the demand for it increases, right? Now, this is explaining you a certain price structure which has been easily demonstrated over here, and all the factors, the previous day's congestion, the previous day's important levels, the congestion of the past few days where the price came and had hovered around over here, the structure considering yesterday's move and today's repetition, all this put together is joining the pieces of puzzle only on the basis of a naked chart. Only on the basis of a naked chart, which is just like the first chapter I teach you. And if you can master this much, some of my students in the starting of the course only, they start performing very well because they are hardcore on practice. Now, coming to the more advanced topics, where we can not just understand from a pattern and a structure point of view, but we can understand the subtleties of RSI, of Bollinger Bands, of moving averages. How do we use that knowledge into pushing it into our jigsaw puzzle which the market is providing us? So let's put Bollinger Bands and find out. Before that, let me just take Bank Nifty and show you that the similar thing has happened over here. Okay, this pullback which we're trying to make. Now look at the lack of structure over here. Again, it is not coming up to these highs. Now only the levels are different. Only the levels are different, but the essence of the downtrend is the same. And is it a very strong downtrend or is it a very weak downtrend? On a 15-minute chart, yes, it is a strong downtrend. On an hourly chart, it is a downtrend, but not yet super structured, not yet very, very strong downtrend. Okay, so we have to consider which time frame we are trading. So when I'm trading, I'm very clear about two things, and I just want a raise of hands on how many people are clear about their time frame when they're trading. If I'm doing positional, I'm only doing position. If I'm doing intraday, I'm doing only intraday. Or if I'm doing a positional, then I'm doing some intraday. How many of you are clear about your time frame on trading? Raise your hands. Honestly. And how many people just wait कि कल आ जाएगा, कल ऊपर चला जाएगा, नीचे चला जाएगा? Out of more than 30 people over here, and these webinars are not just, not just here for you to come. It is here for to come, sit with a pen and paper and make notes. First thing is to plan your trade and be clear with your time frame, right? Now over here, when I was trading, my time frame was the 15-minute and hourly chart. So when I'm trading, I'm very clear about the fact that I'm going to get in and get out within this day, within a few minutes or a few hours. So I would follow the trend likewise. Over here, out of more than 30 people, about only two or three hands which feel that really they're clear about the time frame. Now, the second thing I want to ask, I'm putting the hands down again, and I want a fresh raise of hands. How many of you are clear about a consistent position size? That you will take only this position, you will take only this much size. How many of you are clear about it? Or you take one lot today and five lots tomorrow and one lot tomorrow? One, two, three, four, five. Okay, about five people are clear about it. Not bad, but still, a lot of people are not clear about a few things. One of the important things to tell you is that you have to be clear about your time frame and you have to be clear about your size. And you have to maintain that. You have to plan your trades according to that. Because if you have to become a consistent trader, making money out of the market is easy. Okay, I tell you, it's not difficult. What is difficult is to make money consistently, right? And that is why this is such a, it's a prestige to actually make consistent money in the market, because you have to focus on so many things in an environment which is full of probabilities and uncertainties. If you can focus on what you are there for and you have to scoop out your fair share of profits from the market, you can just do that. And if you can understand the same stability, with the same stability of mind, with the same consistency, give those input, your output will also be consistent, right? So there are a lot of details about that which also are a part of the course in training psychology. But the most important thing is to understand that your mind has a capacity, okay, your brain has a capacity, a limited capacity to make controlled decisions. So when you're trading, you're making what decisions? Controlled decisions. You're following and monitoring the trade. You're reacting the price sometimes. You're waiting for a target sometimes. Sometimes you're waiting for the trade to develop. So a controlled decision making process is what trading is about. So when there's a controlled decision making process which is playing out, you can exhaust your brain capacity, and that is what one person, a typical trader, okay, the 95% people who lose money in the market, they end up over trading. They don't understand that they have a mental capacity to just, saturate, which saturates for decision making. Are you all with me on this? Raise your hands if you're understanding what I'm trying to say. So first you need to take a very clear approach with your time frame. Thank you so much, guys. With your time frame and with your size, and also your limitations on the number of trades you take in terms of what your mental stamina you have. And your mental stamina and your size also go hand in hand together, right? So it's like lifting weights in a gym. And if you lift the weights in a gym, one day you can lift so much, the other day you can lift a little more, and the more you practice, the more it becomes better, right? The whole key about trading is to finding efficiency in doing the repetitive job of accumulating money from the market, right? Then you can scale up. So guys, let's take up Bollinger Bands. Now, what is the concept behind Bollinger Bands? How many of you are aware of the concept behind Bollinger Bands? Kindly raise your hands once. How many of you are aware of what Bollinger Bands are? Well, those who are not aware, very good. And those who are aware, I hope you'll get a fresh perspective, a new way of looking at it. Now, Bollinger Bands are basically these three lines on the chart which you see. Before I go ahead, any indicator is a function of price. It is calculated from the price. Therefore, any indicator, no matter how you read it or what it indicates, right? No matter how you read it, what it indicates, it is going to show us very clearly. It is going to show us one thing. What is that? It is going to show us only after the price movement what has happened. But in case of Bollinger Bands and a few other indicators also, I like to read an indicator for some benefit. I don't want to read an indicator after the movement has happened. I have to read an indicator for my benefit. So I can, before the move has happened, I can look for the move. Bollinger Bands, again, this is one thing which we go in details with the course. I teach very clearly on this. Step by step, try and understand how Bollinger Bands work out for us. Right? Now, a perspective on Bollinger Band, probably I don't know how many places if you have ever heard before, right? Some of these are my own observations. Maybe you have read it in a book, maybe you don't. Okay, let's understand. These three lines on the chart which you see, the upper line, the lower line, and the middle line. The middle line is nothing but the 20 period moving average. 20 period moving average, right? Now 20 period moving average is a trend following indicator. A 20 period moving average is a trend following indicator. A 20 period moving average is a trend following indicator, right? Now that 20 period moving average which you feel is a trend following indicator is basically trying to tell us that the price is moving in a certain trend and it is smoothing the trend. But these two lines, what are these two lines? हमने statistics में पढ़ा था standard deviation. These two lines are nothing but standard deviations. Okay, so two standard deviations here and two standard deviations there. Two standard deviations here and two standard deviations there from each other. That is what this line is about. So when you have two standard deviations on the upper end and two standard deviation lower end, it is trying to show us that the prices are moving somewhere in sync with these bands. Now, statistically, it was found by John Bollinger, who invented these bands, that these are good parameters. You can, of course, make it 20 period moving average की जगह 50 period moving average कर सकते हैं. Now, all that can happen. Now, the first intuition people get by looking at a chart without any kind of understanding of how to read a chart is that कि ऐसे यहाँ पे ऊपर sell होगा, नीचे buy होगा. Okay, that maybe when the prices hit the upper band, it is a sell. When prices hit the lower band, it is a buy. How many of you feel that the Bollinger band is showing me upper band you sell and lower band you buy? Some people think like that. No, that's not how it is done. First, we need to understand that the Bollinger band setups are only a part of the volatility nature of the market. Like for example, a moving average is a trend indicator. Bollinger band is a volatility indicator, and the other kinds of indicator also. So under volatility indicator, Bollinger band is, in my sense, works out, and I can read it. One of the best things I find from the volatility indicator perspective. Whenever the price is hitting the lower band, or whenever the price is hitting the upper band, what are we getting a sense of? We are getting a sense that the price is deviating from the mean. Now, if this is the average, moving average means mean, right? This is the average, which is the mean, and price goes away from the mean and comes back towards the mean. Goes away from the mean and comes back towards the mean, right? So when the price is very close to the mean and it is going up, then it is a stable thing to go up. Okay, when it is deviating far away from the mean, there is a sense that the price can revert back towards the moving average. Now, obviously, there are fantastic market movements where the market keeps going higher, the keeps going lower. Okay, there are fantastic big moves like that. But whatever we study in technical analysis, we have to study and get confirmations from multiple time frames. Okay, I'll come back to that with the daily chart also. But in this time frame, let's understand the hourly chart. The price whenever it is hitting the upper end of a band, so over here, it is hitting the upper end of the band. Now, it is not a sell or it is not bearish. In fact, it is showing us that volatility has emerged. Volatility has emerged in the uptrend. So if volatility is emerged in the uptrend, and by the basics of technical analysis, we know that a trend which is there to sustain. A trend tends to sustain. By just that much we know that a trend is there to sustain, right? So when we know that the trend is there to sustain, and we can understand the volatility has emerged towards the uptrend, can we expect more move of the uptrend? So this is something which is bullish. Bullish. Okay. Now the first question which would come to your mind, sir, you are saying this is bullish. What happens over here? What happens over here? Very good question. I will say to that. What happens is that whenever we see that the market is going in an uptrend and it is retesting this line again and again, it has gone far away from the mean. After a point, we understand that the price is now exhausted. The move is exhausted. But so how to make a distinction between which move is exhausted and which move is consistent? Let's take another example. You see, when the price came down, pierced the lower line literally, came back up. What is the price doing before it is coming to the upper line? The price before it is coming to the upper line is coming and hovering around the mean. So this is the area like a launch pad. So this launch pad, you can see this area is like a launch pad. Now let's take up the daily chart and take Bollinger Band and match it up with the different scenarios which we see. Okay. So this is the daily chart and this is the Bollinger Band over here. Right. Now if we see again, if the market has come and literally pierced this line and literally come at these lows, right? What we see is that when it is going back up, it is not creating a lot of movement before it is crossing the middle band. So whenever prices consolidate around the middle band, you can make your notes. When they come from one extreme of the lower band, they consolidate around the middle band, or when they come from the one extreme of the upper band and consolidate around the middle band, the moves which happen following that are very strong moves. You can see very strong moves. And when there is not enough consolidation, what are we understanding? We are understanding the price is going from one extreme to another extreme. The price is going from one extreme to another extreme, one extreme to another extreme. So when all these extremities are happening, these are not very healthy signals for the market. Are you all understanding what I'm trying to say? Are you getting my point? Right? Thank you so much. So what I'm trying to say in this scenario is that whenever we are going to see the markets which are, falling markets and which are markets where the extreme movement is happening, because more of the volatility comes with the falls, right? Not as much with the rises, as much it comes with the falls. So when we see markets where from that perspective, we are again and again going to see the market is retesting the lower line very crucially without coming back up. We are going to see more of that. So the nature of reading Bollinger Bands in the lower and the downtrend scenario and the nature of reading Bollinger Bands in the uptrend scenario is very different. So you have to be very careful about what is the scenario you're looking at in question, which you can decide that it is an uptrend scenario or downtrend scenario. Getting my point? So once we make a clear judgment from that perspective, is it the uptrend scenario we're looking at or a downtrend scenario we're looking at? Then we can make a better judgment of what is the kind of market phase which is going on. And once we make a clear judgment of the market phase which is going on, okay, we will be able to understand the market better. So make sure that you are very clear about which scenario you're looking at and which scenario you look forward to trade. So that is point number one, which you always have to keep in mind, right? And when it comes to the multiple time frames, you have to see where the price is coming from. If the price is already in a weak zone, is it a very strong thing that the price is coming from the lower to the upper band without any consolidation? No, it is not a very strong thing. So therefore, there is a weakness which is lingering about. Plus, there is a resistance area which is right in front of it, which is right overhead. This resistance zone is right overhead. So if I just match up and do a little bit of 2 plus 2, I can clearly understand that this market is a weak market to many extent. And I would not say it's a weak market. It has the potential of being a weak market. Are you getting my point? It has the potential of being a weak market. So you have to make that very, very clear distinction when you are looking at trading. That what are the time frames I'm studying? What are the time frames I'm using for my confirmations? And what and how would I like to place myself in these different scenarios? Are you understanding what I'm trying to say? Okay, any questions till now? Any questions? I'm getting some questions. I would encourage more questions to come. Okay. Ankit is asking, hi, ICICI Bank is forming a inverse head and shoulder on daily chart. Should we buy breakout? What happens in a weak market? Okay. Rahul is asking, so here we expect market to go down in near future. And Sanjeev is asking, what is the best time frame for trend analysis in the daily and hourly and weekly? Okay, good questions, guys. And thank you for asking once again. So I start with the last question. Since a more generalistic question, let's talk specific. Let's understand what scenario I'm trying to tell you. In the case that the market is showing us weakness, in the case the market is showing us strength, we must see if that weakness or strength is also in alignment with the broader time frame. If the weakness or strength of the market is in alignment with the broader time frame, obviously we are in a better position. Okay, how? How, sir? How is it a better position? So when a weakness is lingering in a larger time frame, say for example, Mr. Sanjeev, very good question you asked, and very pertinent to everybody. In the daily chart, if I see that there is a very strong red candle which is making place at for the understanding of everyone. Okay. This kind of candle which I'm seeing at the resistance zone. Now, when the price is around over here taking a fall, that means one it has one at one point it has taken a resistance. For once it has taken a resistance. Make sense? So when for once it has taken a resistance, okay, the next thing I'm going to look at when it is coming and pulling back up. Is it coming and pulling up with a strength or with a weakness? So when it is coming and pulling back up with a strength, that means then it should be a lot of structure in the move, a lot of healthy trend. When it is not happening and when it is coming here in the and showing me bearishness, in the zone of this candle, look at what move is happening. In the zone of this candle, look at what move is happening. So I'm going to be very crucial about the zone of the candle in question. Are you getting my point? I'm going to be very crucial about the zone of the candle which is in question. And if the zone of the candle which is in question is showing me a certain kind of bearishness, then obviously, like for example, take M&M. One second. One second, guys. The chart is here. Yeah. So you see over here, when we are noticing that the price has taken a strong red candle, which is in a way, it is not an exact shooting star candle, but it is a kind of a shooting star by its essence and nature of it. Okay. Now, after this fall, the price is going back up very meekly. So over here, the larger time frame is down. I mean, the larger time frame is up. Okay, it's made a higher high, but there's a weakness going around. And you see the kind of falls which has happened in the next few days. So take perspective from these kind of examples and see when the price is given a big hit and there's a pullback. This means that this is a pullback. So when the price is broken these lows, there's a full confirmation that this is a downtrend. And look at how strongly the price is falling. Look at how strongly the price is falling, right? So you have to understand the essence which the broader time frame is trying to give you and use it, because when the smaller time frames are going to move, they are going to move only because the bigger time frame, okay, the bigger time frame are going to support them. Okay. Now the second case scenario, sir, ऐसा तो हमेशा नहीं होता. What if a fresh down move starts? Till here I will find it very bullish. So what you need to understand is our focus is setup wise trading. Our focus is not trading only on the basis of just one thing, right? So when we see different scenarios like volatility, like momentum, those are going to be the places where we are going to get an upper hand. We're going to get an upper hand on understanding this particular multiple time frame this thing. So when I see that the Bollinger Band upper band is hit and there's a red candle over here, this is showing me that there's a lack of momentum on the upside, or the momentum can subdue on the upside. I'm not saying that it has to become a downtrend straight from here. I'm just saying it can subdue, right? So if something can subdue in momentum, the logic is simply that over here, I'm going to wait for the entire setup to happen. Now over here the price pulls back near the highs, comes back down. There's a double top pattern which is happening, and there's a very amazing breakout from this pattern from 774 just in a matter of two trading sessions. Just in a matter of two trading sessions, it's gone more than 8 to 10% down. So you can understand the essence of what I'm trying to say. Are you with me, Mr. Sanjeev now? Now, thank you. And if you have any further questions regarding the same thing, you can ask again, not a problem. And if anybody is not understanding something, you can ask again. Now, point number two. Let's go to point number two. Point number two is that Ankit was asking, so I'll take that question up about ICICI Bank. He says that it is showing a head and shoulder pattern, and at the same time, Ankit, can you please tell me which time frame are you looking at the head and shoulder? Which time frame are you looking for the head and shoulder in? At the head and shoulder? So, okay, Ankit, now understand one thing. When we are looking at a head and shoulder pattern, I have told you this before, no? That we have to wait for the completion of the pattern. And firstly, that is the case. And the second is this a head and shoulder pattern which is completed where the breakout has already happened? No. First of all, is it on a straight line? If it is not a straight line, can you make a sloping trend line? If it is not a sloping trend line, you see the overall trend. Overall trend is up. So an inverse head and shoulder can happen over here, which is a continuing head and shoulder. So I would want a strong breakout before you can dream. This is what the tendency becomes. And don't mind, it's not about you, it's about everybody, and including myself when I started trading. The tendency is that one tends to see a half-baked pattern and try to go about with a half-baked pattern. Yeah. So we don't have to see a half-baked pattern and go with a half-baked pattern. We need to see a clear pattern. So I would encourage you to go for some clear moves, and that is going to really reward you. Are you getting my point? And until the moves are half-baked, there are a lot of other evidences which may be in place but out of your notice at that moment. So we need to be neutral when we are seeing the markets. So when we are seeing the markets, we need to be neutral. We can't think too bearish or we can't think too bullish. Otherwise, we will tend to get biased. Okay. So keeping that point in mind, I would say, Ankit, you're doing well. Your identification of the pattern to whatever extent it is made is not bad. It is just that it is not a complete pattern as yet. Okay. That is what I'd like to say. I hope I'm clear, Ankit. And yeah, thank you so much. Anyone else? Okay, I've got a few other questions. Everyone will be, all the questions will be entertained. Don't worry about that. Okay. So Rahul is asking if the market scenario is, I'm expecting it to be bearish in the future. Well, Rahul, yes, the trend should continue. Okay. And if I was not having this session, I would probably also be shorting right now. But I'm just trying to say that the trend should continue and the trends tend to trend. That is the essence. But whenever we say a setup, at that time we should go for the trade. So I would say that I am looking for bearishness, but I'm not looking for until the setup is ready. I'm not going to enter into a trade. I hope you're understanding what I'm trying to say. So the first, the setup needs to be ready. Any questions? And for all you know, let's check up what the potential of this trend can be. And I'll take up every question. So kindly wait those who are not getting their questions answered at the moment. So let's take for example Nifty, because since you're asking about the larger broader trend. Now over here, the potential of the trend when it comes to it's tested the lower line, the Bollinger Band example, there are interaction zones around 10,650 area. So when the falls are happening, if the falls are happening with a continuation, it will give me those opportunities and it will give me those phases to enter those trades in that manner. Okay. But when the falls are happening without any, bigger structure, I must wait because there can be potential reversals which may be waiting for me or potential sideways movement. So I'll be a little nimble with short positions at the moment after these 2 days. And according to how the price action takes place tomorrow, I will make a fresh analysis and a fresh approach to the whole thing, right? So that would be my personal perspective. Now, Pratik had a question. Uh, Pratik said, would like to a video on awesome oscillator or if possible and another thing that isn't a triangle forming in nifty hourly oscillator is in green but I should expect a bit bouncy. Pratik, just kind of be a little more specific about your question because when I'm reading it, I'm confused. When I'm reading a question, so you want to know more about the awesome oscillator indicator, is it? Something like that? Okay. Good question. Sajeev ji is asking, do you take trades on anticipation or do you wait for confirmation? When you see a stock facing resistance, it may break or fall, or how long will wait before you jump into a trade? Well, it's a very subjective thing, Mr. Sanjeev. There are other forms of analysis which can indicate the presence of a likely breakout slightly before the breakout. Okay. So when suppose that would be Elliott wave theory. When Elliott waves are very confirmed to me, I may take a part of my position slightly preemptive. Okay, but that would not be in every case. I personally would go for a proper breakout to happen if I'm in the smaller time frame. In the smaller time frame, the charts are a little more noisy. So until I have the breakout right in front of me and very much confirmed, it will be not a very happening thing, and I might get caught up in the false breakout without even knowing it. So that habit does not serve me in the smaller time frames. Yes, in the bigger time frames, if the candles and the Elliott waves and everything else is in place, then I might go for something which is a little preemptive for at least a part of my position. I can try doing that. Depends on the situation again. It's a very subjective situational thing. But I hope you got your answer what I'm trying to say. Okay, he's asking about 5 minute and 15 minute. No, 5 minute, 15 minute. Of course, I will not preempt the breakout very easily in every case. Maybe 5% cases I may do something like that. But most cases I will not do that. I will avoid that kind of a trading behavior because that will not be a very long thing good for me in the long term, right? So that's the kind of thing. Okay, Pratik is saying that he's expecting a bounce in Nifty. Yes, that's a possibility. Now, again, see, every bounce will not just happen like like just like that, right? So we have to give some time for the setup to take place. And that's personally my style of trading. You can have your style of trading. You can make some aggressive trades also. But what I recommend to people is that you follow a style that works in the long term. Okay, and I would really say that those who are young minds find that they have potential and want to learn, please join the 15 session course, which is a full 15 session full-fledged course. And that full-fledged course is really going to take your analysis to a skyrocketing level. By the way, okay, somebody is asking the course fees. It's 12,500 rupees. The course fees is 12,500. The course fees is 12,500. Okay. No, the whole point is that the 15 session course is a 15 weekends. It takes 2 months for the course to finish. And anybody who is likely or to be interested to join can message me the number. My team will get in touch with you. Not an issue. Not a problem at all. The whole point is to find a setup and then follow the trend and understand the potential of the trend because money management and booking profits is also a part of the deal. Some of the most intelligent people I know who are good at understanding everything, but they have a problem with booking profits. And I tell them only one thing. Deliberately, I keep telling them only one thing. See, the whole thing is that booking profits is an art. Okay. So you need to understand the potential of the trend which is going on, and then it will serve you better. This kind of habit. Okay, hourly chart triangle formation on Nifty, Pratik. Are you saying that is happening on Nifty? With Okay, fine. Let me check up, and then other questions I will take up. So Nifty hourly chart. Where do you see a triangle? That's a clear downtrend that way. It's a clear downtrend. So if there's a triangle, then how do you expect a reversal? I expect a reversal around 27,000 zone in Bank Nifty is very important. So if the price is consolidating over here again and again, I might expect something interesting over here to happen. So 27,000 since the price is setting up over here and resting over here, these are important zones. But then I would expect nothing more than a fair pullback because this is a downtrend. And if the setup is ready to show me much stronger moves, then I would expect something which is more interesting than just a small pullback. So I would wait for that bigger trade from the setup point of view. But if I'm doing some intraday trading, I don't mind, just taking a few 50, 60 points out of Bank Nifty. So that is the thing, right? Okay, some more questions are coming up. Okay, Pratik, I'll check your message, not an issue. I will take it up. I will take it up. Okay, let's ask. Ravinder is asking about L&T Financial Holding and VEDL. So let's take up VEDL first. VEDL. Excuse me, guys. Yeah, so here we go for VEDL. I've been talking about this again and again and again that VEDL is a strong long-term downtrend, and one should look for only downtrending moves in a strong long-term downtrend, and I would not take a trade from there, right? So VDL and Anand is asking us a position he has on the put and he is having a profit and whether he should book it. Mr. Anand, you should have thought of this. If you're making profits, of course you can book it or you can follow the trend. That's a personal thing, right? So you should have thought of this before taking the trade where you have to book the profits. Okay. So that is what I will tell you, that you book the profits, but you decide where you put the profits. How will I decide where you book the profits? And if you are finding the trend to be very strong, then hold on, because then more moves can come. And there is time for the month to end. So you can hold on with your position on the trade. Are you getting my point? Okay. Then we take up LNT. L&T Financial Holding. Somebody is holding and he's asking us if we should exit it. Mr. Ravinder, you're asking us about this. Has to do that, Anand. No problem. Are you long or you short? Are you long or are you short? I'm getting too many messages. Okay, so why are you long on something which is downtrend? And what is your time frame of trading? What is your time frame of trading? These are things you should be clear about when you're taking a position. How are you going to plan it? You should stop out from this trade, is my personal opinion. That's what my personal opinion is. You should stop out from this trade. Okay. Okay, guys. Okay. So more or less all the questions are done. So guys, thank you for coming today. And Pratik, I will check your message a bit later. Okay, because my phone is occupied with some updates. So take care, guys. And those who are interested in joining the 15 session course should contact my team definitely. And I'll see you all on some other live session. Thank you so much for your wonderful time. And let's see each other some other time. Take care, guys. Enjoy. I'll keep seeing you. Bye bye. Take care. Thank you so much. Thank you so much. Thank you. Thank you. Take care. Thank you. Thank you, all of you.